Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. On today's show, we are bracing for another initial jobless claims number that, let's be face it, will probably just rally off like we have the past two. We'll talk about that and talk about earnings from Bed Bath & Beyond, Morgan Stanley, Rite Aid, which stocks were hot yesterday. A lot of quote-unquote COVID names. Slack was hot, Benzinga was hot, Peloton was hot. So we'll talk about that. Our guest is Marc Chaikin. He would join the show at 8:15 and hang out with us through, we hope, the initial jobless claims number and give us his thoughts on this market. I will bring on Joel. Now, Joel, what is going on here overnight?
Good morning, Spencer. We have a nice range overnight. We have a 50-point range. You have make it at a 60-point range. They hit it early last night. They got it under that double bottom we've been focusing on at 2751 area. They got it to 2746, and just when it looked like we were going to 2700, turned around on a dime. We got up through yesterday's intraday high at 28.06 and a quarter. Still up 7.5 handles here. I think you just have consolidation station here right around the 50% level. The market is trying to decide, are we going to hold in here? Are we going to blast to 3,000? Or is this rally ran out of steam? Maybe that 830 number will help us out with that. Crude, we're done with that May contract. We're looking at the June. The June is up 65 cents at 26.69. 27's the high, so maybe crude can stay green today. Gold, a little bit weak yesterday, but getting all those losses back. It's up $25.80 at 17.66. You have silver up 2.5% at 15.89. Bitcoin back above 7,000. The futures are up $305 at 7,055. So Triple D, did you have much action last night before you turned it off at 8 o'clock?
Always action. We were down significantly last night, so a huge reversal. I mean, last night we were down, had to be 20 handles at least before I checked out. So, and then overnight, just the overnight ripper here. I don't know a catalyst really, if what the catalyst was. I mean, we did have the Abbott Labs, but that was, I thought out earlier that they were talking about that. They officially came out though and said that they are going to be having the antibody test ship out today. So, which is good news, but I think it was just classic buy the dip again.
Yeah, and you got that line in the sand in the S&Ps. You got the double top from the Globex sessions up there. Also, we don't talk, we haven't been mentioning it a lot because we've traded through it so many times, but that 50% retracement, I mean, we're basically right there in a spider, right there in the S&Ps. We got one close above it on Tuesday. We didn't get one yesterday. So to me, closing above that 27.86 level, not once, but twice, but three times, gets us poised to maybe take another poke at that double top at 28.46 and change.
Double bottom too from the last couple of days, which is interesting as well. So if you go the previous day's low, 275.51, yesterday's low, right, coinciding with it. Joel talks about these double bottoms, and I mean, these things work 5 cents away from it. So that's, major support here at this time. Again, we are still battling around the 50% retracement between the bulls and the bears. So it's not clear sailing like Craig Johnson was saying it might be. We've been fighting here a little bit there, but still to be determined if Craig's going to be right or not, because he thought if we got over 281, 282, we could be on the road to 300 SPY. We will see. I'm still skeptical because I still think there's a lot of bad news to come here yet. But regardless, this market is holding up.
Yep. Okay. Let's go to some individual issues.
What do you got, Spencer?
Let's start with earnings here. Let's start with Rite Aid. It is among the biggest losers of the morning here, down 14%
Shocker.
or so. Uh, yeah, well, you say that in jest, but isn't it a little bit of a shocker? I mean,
That a stock is down on earnings.
well, that their earnings weren't good. I would have thought. I mean, I went to.
Yeah, the drugs.
I mean, it's a drugstore. I went to CVS like 5 times in March.
But are
Uh,
people going to the drugstore more? Just because they're open doesn't mean that they're going to them more. I mean, what are you stocking up? I guess maybe you're stocking
yeah,
up on your Tylenol and
and your toilet paper and other
yeah.
things. Sure. So anyway, Rite Aid's earnings out this morning. They lost 37 cents per share. They're supposed to lose only 15 cents per share. So a big miss on that number. The sales, 5.7 versus 5.59 billion dollars. They did guide a little bit, which is nice to see. They gave some fiscal year 21 sales guidance of mid to high $22 billion range, which is above the estimate, but that's a long ways away from now.
A dog is a dog is a
Yeah,
dog.
surprising earnings miss.
This stock is always a perennial disappointer, it seems like. I mean, yeah, it hasn't went down in the last year very
Whew.
much, but you can look obviously from 2019, we're up from the $5 low up to 14, and you'd say, oh, what a stock. But I mean, if you bought this thing anywhere before 2019, you're down significantly. 2017, because obviously the reverse split, the high is $175. So I mean, I think, if you're gonna buy, why Rite Aid? Why not CVS or Walgreens, where these companies are going to be in business? You just don't, or you assume that. I don't know what's going to be in. I don't know if you can assume anything's going to be in business for sure, but Walgreens and CVS have a hell of a lot better chance than Rite Aid. With that being said, there is underneath demand for stocks. I believe that, and you're getting a pullback of 17%. So I'm absolutely not shorting it down here, down 17%. I'd like a little more quality to buy the dip on though.
Yeah, boy, this is straight down. I mean, you just got a seller in here. You just boom. They've walked this down here from 15 and change all the way down to the lows of the pre-market session. So with these, you just like to keep an eye. What's the low going to be at 929, right? What's it going to be? Is it going to pop off that, or is it going to continue lower? I do see some lows. I see one low at 1197. But if you don't want to back up to truck there to cover a short, I see 1, 2, 3, 4, 5 lows. Let's just call it 1144.5. That would be the average of that area. So look at those lows going back, I believe, from earlier in the month. Yeah, at the beginning of the month. So a couple targets there. First one, 1197, then all those lows at 1144.5.
Just 1 sec. I just had a trade. So
Sure.
okay.
Okay.
Yeah, no, I'm good.
Let's just take a quick look at CVS.
Sure.
It's trying. It had that really nice run off the $50 level, got hit, couldn't get back there. That's trying, right?
I mean, it's trying. Like, there's a lot of stocks that have been trying for the last 3 weeks. Some trying harder than others. Like we looked at Wingstop, and that got all the losses back. And you think, okay, pharmacy, that's probably going to be safe, but they really haven't. They really haven't rallied that much either. So you look at where CVS was at the start of this. Maybe it's not hit as bad as the other stuff. Lower beta on it. I think if you're looking at CVS, Walgreens, best and Rite Aid, CVS is best of breed. So if you want to own a pharmacy, it's probably CVS. I'm not sure I want to own a pharmacy, but the dividend's 3.28%. I'm kind of indifferent to it. I would say I'm just not that excited about it, but not really bearish it either.
Yeah, I mean, you're trending with a lot of these stocks that we're looking at, and we're talking about rebounds, and I kind of like to look at the trend before this all happened, and the trend in the oil stocks, not good. The trends in Walgreens Boots Alliance, not good. The trend in CVS was a little bit better, a little bit higher quality. So kind of like to look at that when I'm looking at prospective things to buy.
Jump over lots of stocks. I want to go to the COVID place though, because these things had a fabulous day yesterday. Everything, and what we mean is that list and the stocks we've been talking about, like Zoom, Teladoc, all ripping yesterday. It was literally COVID stock day. The stocks that have been rallying on COVID. Slack is another one. WORK. Josh Brown helped out on CNBC when he popped on and said it was his play. And Obviously, that stock popped over $1 after Josh Brown was on there just at the end of the day. Peloton had a huge day, although Peloton is giving back some of it here this morning. But you saw a huge run in a lot of these stocks. Some of the run is continuing. I mean, let's go to Zoom first, because here it was, 5-6 days ago, and everybody's like, okay, well, this trade is over. Not so fast. In 5 days, Zoom went from 110 and is now back approaching the all-time high at $160. Incredible comeback here for Zoom.
Yeah, and this is kind of goes against like conventional like wisdom, right? We're having Trump speak later on today, right, about reopening the country. Isn't this kind of contrary to the thinking that this is gonna, we're gonna be isolated for a long time?
Somewhat, but I think Zoom, and obviously we use it, is going to have a lot of new users. And the other thing is, just because we reopen, and Josh Brown made this point, but it's an obvious point too. Just because we reopen doesn't mean everybody is going back to their normal way of life. We're not just it's gonna be a slow reopen. People are still going to be spooked. It's not like we're just going to bounce right back. I do believe that's why we had the sell-off yesterday, because we're going to get some clarification on how this opening is going to look. But it isn't going to be like, okay, we're open for business, everybody's going back to their normal life. It's not going to go back to normal for a while. So Zoom, still the beneficiary. I think a lot of business people realize, wow, this is a pretty efficient way to do business.
It is.
If you're not flying around the country, you get on the Zoom media. Like here, I mean, we do it every day. And it feels like I'm sitting right beside Joel and Spencer. Yes, I'm only 20 minutes away, but imagine, being in Japan and your other, person is over in the US. Instead of flying to Japan and having an in-person meeting, this Zoom works pretty well. So I don't think
fantastic.
Zoom, I think people are realizing that this is a very efficient way to communicate.
And I just, I can remember when we first started doing the show with Benzinga, it was difficult to figure out because you were in Canada and then I was in the Southfield office, and to figure out the line, we tried different things, right, Spencer? We tried live stream, we tried
we used Skype for a while, and I can't help but think just how bad Microsoft and Google squander their head starts. They had massive head starts here. Google has Google Hangouts, which is fine. Microsoft bought Skype 10 years ago? I don't even know.
Yeah.
But this is but a small part of their business, but still they had massive head starts here.
Yeah.
And Zoom and even Cisco too. Cisco has their own.
The WebEx is good.
The WebEx is good.
Yeah, that's fine. So
you're very right, Spencer. It was Microsoft had the biggest lead maybe with Skype.
For sure.
The product itself just never improved. It never kept up. It never improved. We used it for a long time and had a lot of bugs and hiccups. Remember how frustrated we get? It would just drop the call for no reason. Or, the video is not working today. It wouldn't recognize this. There was so many little hiccups all the time with Skype. And then we switched to Zoom, and we hardly have any hiccups. I mean, I don't know, like CNBC, and I don't think they're using Zoom, but I'll tell you, I watched the Fast Money last night 3-4 times. They're losing the call. They're losing,
Really?
or they can't get it through. That was horrible. This is CNBC, and I don't know what they were using, but it was very inefficient. I'll tell you, this Zoom, and even looking at the Cisco WebEx, because I believe it's CNN that uses Cisco WebEx, it's pretty good, but it seems like the Zoom is better. So I don't think Zoom is going away. With that being said, it's trading 35 times revenue or something.
Yeah.
I mean, the valuation's
what
insane.
What is their forward PE here? They
didn't even make money. You can't even look at it that way. You gotta look at times revenue.
They don't make money. Never mind.
But you gotta look at times of revenue. And I mean, it's trading at such a sky high nosebleed valuation that, obviously growth, investors like growth. It's got the story still cooking. And what I've said is valuation doesn't matter at all as long as you have a story. If I rate my book on trading, that's going to be page 6. Ignore all valuation if you have a story, because the story will carry a stock much farther than the people who are shorting off a valuation.
Zoom does make
story
money,
wins always. Once a story cools off, that's when we start to go to fundamental metrics. This Zoom story has not cooled off. So I would be a buyer of pullbacks again, just like we were saying back when it was down. I was hoping it would get down to 100. Remember we were talking about it?
Yeah, I know.
I was like, I love it at 100, But we even said the one day, you got a shot. I mean, on that second day, we even said on the show, if you rewind the tape, we're like, you got the 108 to lean on now, and it was trading like 112. So I'm like, if you want to risk it, you know where your stop out is. It's below the 108 level. And here it is. It's run 50 point or 40 points now.
Yeah, I know.
So it's all about setting up trades and risk return analysis. That being said, you're coming in now. Now you're buying the top of the range. I don't like buying something, you know, when it's ran right back up 30% right to an old resistance point. Is it going to test it? Probably. You know, we probably see 160, but you know, for your last $3, you're going to hang on. We don't know what it's going to do there. It's failed there twice. Could have failed there the third time. They say no such thing as a triple top. I'll tell you, sometimes there is. So I'm not buying up at resistance.
Also, when you just talk about, because I know, Dennis, you're a big, you know, news flow trader. I mean, there was bad news out there, right? The Attorney General
still is.
Right, but it's like
we have no clarity. We don't know where that's.
We don't have clarity, but you don't have what was it? Connecticut and New York that started it. You know, if it would have been Connecticut, New York, Illinois, then Michigan, and then Florida, and if you would have kept the capital, you know, the news flow continued to be bad, maybe you wouldn't be here. But it just, in the absence of news in the story, is when you get the pop in the stock. So, you know, it just dissipated. You didn't, you know, you haven't heard anything. Now the Attorney General could come out today and said, yeah, there's major privacy issues, and boom, and they'll whack the stock. But sometimes the absence of news is just as important as like the initial news.
Yeah. Oh yeah. Because now the story's hot and people have forgotten about that again. They're not worried about that all of a sudden. I mean, if a headline comes and all of a sudden, you know, they're getting, and then the stock could get hit on that. So you do have a little bit of headline risk, but there has been no real news on that front in the last few days. And we're not saying they're in any trouble. They were just investigating them and looking a little bit closer.
But the market, the algos, they grab that, you know, yeah.
Oh yeah. Well, the algos trade everything. I mean, I'm a human algo here. I trade all the headlines. I see the news headline and I will trade it as well and interpret it. I love news interpretation. I love headline interpretation. I love trading headlines. There was a lot of money to be made trading headlines if you can interpret the headlines correctly. Sometimes you do it wrong, and in those situations, you scramble for, you know, minimizing the damage as much as you possibly can. But when you interpret the headlines right, I mean, like Costco last night, I bought Costco, it raised a dividend. So I'm like, okay, well, that's going to go. I'm already out of it, so I can freely talk about it. But I bought it last night, and I was able to make over 2 points, just like
before you pivot off that, I want to bring on Marc Chaikin.
Yeah, let's bring him on.
Yeah, to just get his thoughts on this conversation. Marc Chaikin is the founder of Chaikin Analytics. Joins our show every other week to give us his thoughts on the market. Marc, good morning.
Good morning. Let me see if I can get my video started. There we go.
It's a nice photo though, Marc.
Hey, we're going south here a little bit, folks. So keep your eyes open. We just dropped 5 points, which is no big deal in this market environment. But we just went unchanged on the session.
You're heading into the numbers, so you know, anyone's guess. Let's talk. Can I talk about Zoom for a minute? Because I love the 100%. Conversation. First of all, the reason Zoom is so good is the chief engineer from WebEx left and started Zoom. So, and he, you know, the privacy issues, I think, are a non-event. Look at Facebook. Facebook went to new highs for years with privacy and congressional testimony. That's not real. What is real, though, is people are discovering, like my wife and her friends who are playing Mahjong and Bridge on Zoom, that you can get a free Zoom account. You're limited to, I think, 45 minutes of talk time. And you can buy an unlimited account for $140. How do you scale that business? $140 at a time? I don't think you do it. We were Chaikin Analytics was one of the early adopters of Zoom 4 years ago, thanks to John Carter, because it could accommodate 3,000 people on a webinar. But so we pay a lot of money for an annual license that enables all of our people to have their own accounts plus the big ones. But basically, an individual can buy an annual subscription to Zoom for $140. So let's say 1 million people do it. It's 140 million in revenue. It doesn't even move the needle. So I'd be a seller of Zoom here. You can't have it both ways. You can't be a glass half full about the economy and reopening the, you know, the economy, and also be a bull on Zoom. You can trade it. I agree, you know, that you can trade the stock, Dennis, but I think longer term, the stock is, you know, closer to 100, absolutely, but not something I'd want to own at these levels.
think we just lost Dennis here, so let me try to get him back.
He didn't like that.
Yeah, he may have had an
Just
internet.
as you know what, just as we were talking about
hiccup.
how we don't have problems with Zoom.
No, I mean, his internet may have gone out because he's totally off this call. So I don't know what happened there, but we'll try to get Dennis back here in a moment.
I'll start talking faster and people won't notice.
Yeah, no, Mark, I mean, I agree with your point. You can't have it both ways. Well, you have to assume that we're going to go the move back to normal will happen very slowly and gradually. I'm with you on the fact that you can't really be bullish one and bullish one idea and bullish the other idea as well. They're kind of contradictory. So I'm with you on Zoom. For a trade, sure, but like for an investment, like I get that they have a story and all that, but I mean, come on. If you're buying it now, as Dennis always says, then you're a little bit late to the party. So I don't know.
There was a theory I developed early in my career because I used to chase stocks that had great stories, and ended up a bag holder. I called this the day in the sun theory. Every stock has a day in the sun. They get put up on a pedestal. If it's a person, they get on the cover of Institutional Investor or Time Magazine, a la Soros in '87, and that's when you want to sell the stock. You can go back to 2000 and see the big names that were being featured in the press. But I think it's Zoom's day in the sun, and you got to sell the stock long term. But let's
trading at the highs here, the pre-market session, just inching up. We're up 410 at 155.55. Yep. That's above the high from yesterday, 152.57. So if you are shorting this, that would be the gap fill. And then you only have two highs to look at. 161.69 with earshot of that. And then the all-time high, 164.94.
Yeah, I'm not a proponent of shorting the stock because the story can go as long as it wants to go. And if the market goes down, Zoom's probably a better hedge on the upside. There are some stocks, though, that I'd like to talk about. Square was downgraded by Raymond James to an underweight today. And they say there's a disconnect between the action of the stock and the deteriorating fundamentals. So that's a stock that a lot of people like. It's the whole concept, if you use it, own it. A lot of people use Square. And so that's the kind of name, along with, say, a Twitter, where there are some structural things going on in the current economy until we get back to normal, where Square is impacted a lot more than other people because of the point of sale aspect.
I've wanted to own Square now for a while. I recognize that I probably missed my chance, or maybe I didn't actually. I don't know, but this is one that when we eventually get past this, it's got a really compelling story. But the question is, how long will that take? And I acknowledge that they're hyper exposed to a economic recession. And it's a higher beta name. So I'm not quite sure what I want to do here, but it's kind of at the midpoint of peak to trough. But I've been wanting to own this one for a while and haven't pulled the trigger just yet.
Oh boy.
So, oh boy, what? Joel?
Yes.
Oh, did we just lose Joel? Maybe we lost it. Wow.
All right, we're dropping
like flies here today. Mark, I did want to ask you about Costco because we were about to transition there before I brought you on here. Costco is now the third major company to raise their divvy this week. They announced it yesterday after the close. They're raising their quarterly dividend here. Let me get the numbers up exactly and make sure I got them right. Dividend raised from 65 cents a share to 70 cents a share. That follows J&J and Procter & Gamble this week. So what a time to separate yourself from the pack, eh?
Yeah, I'm not a big fan of the chart on Costco. Hasn't got through its long-term moving average. Chaikin money flow is negative. It's overbought. Let's compare it to two other companies, Amazon and Walmart, both making new all-time highs. So the question to me is, why isn't Costco up around 340 instead of 310? What's it doing this morning, Joel?
It's up 273, 313. I know it. I know. Why isn't this running more? I mean, what do you think the
Yeah,
reason for that is?
I don't know, but maybe it's all about mail order because I was shocked to look at Walmart, but then I realized a lot of people are doing their one-stop shopping at Walmart for staples like flour and sugar, for pharmaceuticals marked down 30% from what CVS charges, and that's their low to begin with. And Amazon making new all-time highs. So I've got to think that the Costco story has really played out. We went to Costco right before the stay in place orders were put out in Connecticut, and we stocked up on everything. And maybe it's just the case that people aren't going out to Costco, they're ordering from Amazon. Obviously, their numbers were good. And maybe when they're going out, they're going to Walmart instead of Costco.
I mean, I did the same thing you did, Mark, but I haven't been to Costco since like March 1st, and I
Yeah,
usually go
exactly.
right. So I usually go every 3 weeks, 3 or 4 weeks.
We
So
we talked
um,
about this though when they were ripping Costco on the increased numbers that eventually that trade was going to end because it was an early stock up. Nobody's stocking up now. I would imagine their numbers are going to be getting worse because a lot of people that don't want to go there now. So, I mean,
yeah.
at this point in time, that trade is over. That, like, oh, prepare for the pandemic trade is over. The people are prepared, as much as they're going to be. So now people are scared to leave the home. So that's going to affect Costco sales as much too. Amazon, people are ordering everything on Amazon here now. That's why that stock continues to rep. I think the Costco trade, the run into, the defensive food stocks here, because everybody's loading up, I think that trade's over.
Yeah, I agree with you, Dennis. What do we want to talk about the big names, the Fangs plus Netflix, or is that
Yeah,
overworked?
we do. We
Yeah.
do. We got the number coming up. But I want to just get your thoughts on the market here before we do that. The
Well,
overall market.
I'm still a glass half empty guy because of all the uncertainties and the complicated rollout of a return to quote unquote normalcy. A second meatpacking plant closed down from Smithfield. The first plant that closed down, 5% of the meat in America. The people are just not, to me, this is a momentum market similar to 1999, 2000. The market, in that people are looking at it as a glass half full. They're looking past the numbers in 2020 and assuming things are going to go back to where they were. Barry Diller was just on CNBC. Barry's a pretty smart guy. He has a lot of social properties. He bought Expedia right after 9/11 and went through with the deal. And he said, it's different this time. Now, he's a little older, and as you get older, you take things with a different slant. But Barry Diller basically said it's going to take a long time to get back to normal. And, they're starting to talk about restaurants where you're going to sit every other table with a mask on. And the question is, who's going to work at these restaurants? And are you really going to go out? So we've talked about this before. I just think the return to normalcy is going to take a lot longer. And God forbid, some of these states that didn't have stay in place orders are the first ones to open up. And you see a second wave, or in these states, a first wave, the whole thing comes unglued. So I'm a glass half full guy. I don't know if we'll go back down and test the lows, but I do think that X this number, and we'll see what the reaction to the number is. I think this market still has not factored in the uncertainties. Could go to a new high overnight. It's trading like a momentum stock in 2000. So think of your worst nightmare trying to short Yahoo or At Home or any of those
AOL.
names, AOL or Exodus, which was the big hosting facility that Meg Whitman ran, which went bankrupt. I know that because we had a hosted discount brokerage in there. The point being, I think there are too many unknowns. The market is trading on QE unlimited. These are B12 shots to the max. This JFK would have loved this market. I don't need B12 shots. Just give me unlimited QE, and all of our properties are going to be worth more. So, as long as the market is feeding on the trough of the Fed and the Treasury, I suppose it can go wherever it wants. But to me, it's glass half empty, not glass half
All right,
full.
we are about to get this initial jobless claims number. Estimate is around 5 million claims made for last week. That's about at the 3-week average. The 3-week average is like 5.5 million claims. Last week's reading was 6.6 million. So the number is they're expecting it to decline week over week. Let's see what the number is when it comes out here. 5.24 million claims filed, 5.245 to be exact. So 5.245 million is a little bit above the estimate. And popped off that number. Surprise, surprise. That this is also notable because this is the survey week that they use to get the monthly jobs report. So we will.
This is 22 million people out of work that we know of.
Yeah.
Exactly. These are depression numbers, but somehow the Kool-Aid of unlimited QE, and I don't minimize that. All through this bull market that began in 2009, anytime the Fed was easing, the market went up. When they stopped easing, the market went down. So we've got a unique situation where the Fed actually did the right thing in coordination with the Treasury, which I think if you had asked us in January, if there was a serious problem, would the Fed jump on it? And based on 08, you would have said probably not. And yet that's what they did.
Yeah, we did. We did the last 3 times, we popped and, just going against conventional wisdom. You think that, unemployment, who knows where it's going to be next month. But you know what? You can't fight the tape. We were trading just at about 27.81 on the beginning of last bracket. And then when that number came out, we immediately shot up. We're near the highs there, 27.94. That was your high. Did you just hit? Pre-market high, 28.06 1/4. So there's a target on the upside. And then, man, after you get through that, folks, you have the high close of the move at 28.43 and then 28.45.5, 28.46. I tell you, the way that 27.50 level was defended over the last 3 sessions, it was just like, you don't want to say there's people out there that know, but man, oh man, when you come down even last night, the way it went under there again, brought some of the shorts into the market and then popped it again. So I'll still key on this 27.86. That's the 50% for the whole move. We did get one close above there, way up at 28.43. This 27.5, 28, just a battleground.
Battleground. Could you go back to the previous chart and draw the trend line on the intraday overnight? Because we've got to really get through that trend line. We've rallied every time that we've had the employment numbers come out. So this isn't a surprise. No,
right.
So if you draw a trend line through the tops,
right,
we got to hold that level. We've got to hold that level right in here.
You know what's crazy to me? So 22 million people have filed for unemployment in the last 4 weeks. From the trough of the Great Recession to February of this year, so a 10-year span, 24.8 million jobs were created. So it took us 10 years to create 24 million jobs and took us 1 month for almost that same amount of people to file for unemployment. It is mind-blowing stuff that you can't even begin to comprehend.
Well, we've had a engineered shutdown of the U.S. economy, so none of this is surprising. It's just big numbers.
Yeah, well, sure. Yeah, it's not surprising, but really big numbers
But that's why I say the question is, how long is this going to last, and what's it going to look like when the restrictions are lifted? So New York and Connecticut have both mandated that you have to wear a mask if you go out in public. Not just the supermarket workers, everybody has to wear a mask. How long? I just don't know. It's really bizarre.
Maybe the higher the unemployment goes, higher the market goes.
Yeah, because the Fed has to do more.
Yeah. Yep.
Until the Fed takes their pedal off the gas, it's probably going to be hard to build up downside momentum. That doesn't mean you want to run out and buy the market, in my view. clearly I've been cautious and I'm going to stay cautious because if you jump in here, the question I'd like to ask is who's buying other than the machines and these quant strategies that, were totally de-risked and went out of equities. Who's buying up here?
I don't know. The Fed is buying. I don't know.
Well, Janet Yellen said a week and a half ago the Fed should start buying equities. Maybe they're about to. Maybe they'll be buying ETFs. We always used to joke about the Goldman Sachs put in the 80s and 90s because all the Treasury secretaries were from Goldman Sachs. Guess what? They're back with Mnuchin. And we always used to joke that after 87, every decline in the market was a backstop with some sort of Fed maneuver. It was one of the great conspiracy theories, and it probably was true in one way, shape, or form. So we've got a great Fed put here, and who knows that they're not going to be buying stock index futures.
Yeah, I think I know Dennis when we get him back on later on today or tomorrow.
Oh, he's here, I think.
Oh, he's here. I'm sure he's busy.
He's just in the background.
I like to see the open book. I don't pay for the open book, but man, I just wonder, if there's huge institutional sell orders out here, then a lot of times it takes a while to to chew through those and stuff, but sure doesn't feel like that's out there. I mean,
no,
that's usually...
I don't see institutional sell orders.
No.
I mean, there are in certain industry groups. They're still looking to sell energy. They're still looking to sell the banks. But once you get outside there, they're big buyers of Amazon, they're buyers of Walmart, they're buyers of J&J, P&G. But
what do you think about the banks, Mark?
I wouldn't touch them here. Loan losses for one quarter sometimes breed loan losses for a second quarter. And, and when you go through Citi's statement, they're basically saying that the consumer is dead. And they're expecting big defaults on their consumer loans. And
JPM said that too.
Yeah, so I think there are better sectors to look at. I think healthcare and technology are still where you want to be focusing on, unless you're a bottom fisher. And
what about what do you think about the airline bailout structure? That's from
well, we've got to be a country and have an economy. You've got to have airlines, but I think the airlines never really made. If you look back 50 years, net, the airlines have not made money. It's an odd statistic. The airlines don't make money. They're like a public utility, so the bailout's appropriate. I think a lot of smaller airlines will fall by the wayside, or you'll get mergers.
We definitely need a bailout. I don't know if we needed the terms that we got, but it's really nothing you can do about it, because as much as the terms of the bailout piss me off, there's nothing I can do about it. So I don't know.
Did the government get equity in the bailout or no?
It's not minimal. This is not like GM. This is minimal equity. This is.
Yeah, I mean, the government did pretty well in 2008 with their bailout money. Got a nice return. So
yeah, no, it's not. It's not. That's not what's going down this. I mean, they get warrants for Delta that could be up to 1% of the company, which whoop-de-doo. Most of I think 3/4 of the let's not even call it a bailout. Let's call it like a safety raft, because we're gonna have to do this dance again in 5 months. But 3/4 of the money is just grants. The rest of it is a low interest loan. So
yeah, I'd like to end my segment with I'm sober right here, not in terms of 5 o'clock and on, but
I hope so.
I'm a glass half full kind of guy right now, and I want to zero in on what I think the key point is: kids going back to school. Because until kids can go back to school, their parents can't really go back into the workforce. And I'm talking about the low income portion of the economy, where they've really been hit the hardest with the layoffs. So what is entailed with kids going back to school? Well, you need workers, teachers, you need food service people. It's a big chain, and it's got to be done right. And then you run the risk that the kids who have the immune system that's stronger than the older people get it and bring it home. They get it from one person, and it spreads like wildfire in that lunchroom environment, schoolyard environment. And that's why I'm glass half full here, because there are so many unknowns. And let's say we do open the economy and kids go back to school and there is some level of testing. What happens in that next wave when some kids in Detroit, not wishing it on Detroit, or Wichita, Kansas, bring it home? Then
Yeah.
then the stock market just slides, and there's no backstop. There's no amount of QE that helps when people get scared.
I just, we're going to reopen, but this thing just isn't going to go away is the problem. It's around. It's probably going to be around now until we have a vaccine. And then the question is, does it mutate? I mean, I just don't see everybody going back to what they were doing 2 months ago. I just don't see it quickly getting back to there. It could take a long time. I don't see people jumping on a plane to go take a cruise. I don't see people jumping on a plane to go to Disney World anytime soon. Even if it's reopened, it's not like, okay, yeah, we're good to go. We're not good to go. It's going to be some things, but things are going to be different. Josh Brown was talking about a mask, how everybody's going to be wearing masks out there. It's going to be a really weird world for a long time. And until we get a comfortable vaccine, and that's not even easy to make. I mean, they're talking about, something Trump's obviously saying optimistically by the end of the year. I don't think so. If you listen to the doctors, it's 2021 probably for a vaccine. And then the question is, does it mutate? Are we going to get this thing right? This is just a new thing that is out there that is much more deadly than the flu. And I think when you really analyze that, economic growth has to be impaired by this. And I don't think it's just going to bounce right back. So that's why I have a hard time just saying, okay, yeah, I'm going to buy stocks here when, a lot of these stocks have come back over 50% of their losses. I feel like if you're buying now, you're banking that this is a non-event and we're just going to back to the all-time highs and everybody's going to go back to their normal way of life. And I don't think that's going to happen.
I agree 100%. I mean, you could buy them here with a 3 to 5 year view and watch them go down 50% and then say, what did I do? So I wish I could be more positive because.
No, Mark, no, that's okay. I mean, a market veteran, like yourself, we appreciate your opinion. And, also being a market veteran, you can't fight the tape. And now, the market is telling us, the tape is telling us that there's no big deal here.
So you got to know who you are. I agree there, Joel. You're either a trader or an investor. And a trader has to watch the tape like crazy because you don't want to be on the wrong side of the tape. An investor has two choices. They can protect their capital or they can say, I'm in it for the long haul. But as a retail stockbroker, starting from the mid 60s through the 90s, I can tell you that resolve totally dissipates on the second wave down. If there is a second wave, the institutions tend to sell on the first wave. The margin guy, the heavily leveraged get kicked out by margin calls. But that second wave down, and this is all, you can look at the money funds. There's huge record inflows from institutional money into money market funds. Retail has barely budged. So what does that tell me? It tells me the retail investor is holding on. The robo allocations are not going to cash. They're staying in SPY and IWM and QQQ.
Yep.
And so it's that second wave down, if we get it, where the institutions have done most of their selling and individuals puke out stocks.
All right. Marc Chaikin is the founder of Chaikin Analytics. I don't say this enough. It's a really great research platform for stocks and ETFs. They've got a whole bunch of technical and fundamental info, a great research platform. Marc, thanks for the time as always. Be safe out there.
You too. Thank you, Dennis. Joel, be good.
All right.
Thanks.
All right. 8:44 here. We just lost Joel, but he'll be back, I think. I think he's here in the background.
We jinxed ourselves when we were saying how good Zoom is.
Yeah. Well, what happened to you, Dennis?
Actually, it wasn't Zoom's fault. My computer just decided it's once a week shutdown out of the blue.
That's what I thought.
So, like I said, I need a new computer, but I'm not running to Best Buy to go get one here right now. So we're just working with this one. My trading computer is excellent, but this one over here that I'm running the Zoom on is a little bit finicky.
I thought it was either internet connection or maybe your computer went out.
You know what? Yeah. Just after that, when we were talking with Marc.
Yeah, what happened to you, Joel?
My internet went down for a second too. I'm like, oh man, the gremlins are back. What are we doing?
We jinxed ourselves on
I
these
know.
Knock on wood.
Yeah.
I want to talk Hertz here. The New York Post caught up with an anonymous source, probably from Carl Icahn's camp, that said it is a coin toss whether Hertz does not go bankrupt by the summer. Not a surprising sentiment to see, but I guess in this market, we're going to assume a bailout until proven otherwise. I don't know.
I mean, the sweetheart deals went to the airlines, so could Hertz get a sweetheart deal? Possibly. It doesn't seem like this administration wants anything to go bankrupt. Under a normal Fed, I would say Hertz is dead and dead in the water. If they need money, I would think that would not get a bailout. But under this Fed, probably gets a bailout. So with that being said, too, I would think it'd be at terms of serious dilution. But we saw so far with the airlines, the sweetheart deal had barely any dilution in it. So I have no understanding how the Fed is negotiating these deals, but they're decided that they're not negotiating from a point of strength, with which they are, but they've decided they're not. Anyways, I think anybody could negotiate a better deal than with those airlines for the U.S. taxpayers, but we've talked about that. Talking Hertz, it's a call option here at this point in time.
What was the trend before in Hertz?
Horrible. Hertz has been in trouble for a long time. So again, and Hertz does a lot of equipment rental. They do some other stuff besides the cars. So they have some other businesses, but at the same time, car rentals. What's been hitting the car rentals? Uber, Lyft. I mean, we've talked about, the changes in the way people travel. People don't go and rent a car like they used to. And that's why you see Avis budget CAR. I know it was actually trying to hold on 2019, but really, we went down, $70 in 2014, 5-year downtrend there. And now you look and you wonder, well, if Hertz is going to go under, Avis budget could possibly go under here too. So these companies absolutely need a bailout. It's just a matter of whether they get it or not.
I was just glancing over the charts here, and I hadn't looked in Lyft in a long time. So if anybody it was Uber. The kind of technical formations that Dennis and I like to look at and see. 1, 2. Well, let's see. How many highs do you have here? I see that one blip at 28.89, but man, I don't know. I guess you got a whole zone here. It looked like it was more at one whole number, but like 28 to 29, someone's doing some big liquidating in this thing. Over the last 1, 2, 3, 4, 5, 6 sessions, your highs have been basically between 28 and 29. So until you clear that 29 level, it looks like it's getting tired up here. So keep an eye on that. I mean, institutions, like we talk about like one level. Dennis, what have you been seeing in the open book? Because I mentioned this with Chaikin. Are you seeing any like those big institutional sell orders?
I mean, you see big institutional sell orders when you haven't been to levels in a long time, because people throw them out there GTC. I mean, we cleared out the book on the downside. We cleared out the book on the upside. So the books are relatively empty. I mean, if you went and looked at an Abbott Labs, I'm sure you'd see some size up there in the mid 90s. And we obviously pulled back from there this morning just because the stock has never been there before. You typically see big size in levels that they haven't been there in a long time, because the institutions have had a chance to really reload and say, look, a lot of them just I don't know why they do it that way, but some of them still do it that way, where they got 100,000 shares and they'll say, okay, I'll sell 100,095, I'll sell 100,000, 100. They throw them out there GTC, and these orders sit on the book for months. You see them there, and and obviously you can trade off of those, because that's a big resistance point when you have an institution sitting with 100,000 shares to go at $100. The math says it takes a lot of money to take that out, so $10 million. So it's, just basically, think of a goalie in hockey. If you're going up there and you've got a big institution sitting there, it's a big goalie to try to get the puck through. And it takes a lot of money to get the puck through that. So that's why we focus on the book a lot. But in this market environment where the book's been cleaned out on the downside and cleaned out on the upside, because we've had so much volatility, there isn't as much relevance in the book as there normally is.
Okay. All right, Dennis, how's that 350 trade been working out for you? We're getting a question on that.
350
the imbalances?
Oh, I mean, they're still, you're seeing it now, though. The last few days, I've noticed that there isn't as much movement. So obviously you've got the algos that are starting to figure it out too. they rip them or they dip them on that number, but the moves aren't as extreme and it's not as much follow through. I've noticed the last few days. Again, the imbalances haven't been as big. So maybe you've got institutions saying, well, I'm getting some bad fills here. I got to back up and back off from that strategy. And I think you're seeing that to a certain extent too, because like yesterday we saw like 700 million to sell, not these 2.3 billion to sell or these huge amounts. So institutions are realizing, hey, we're not getting the liquidity that we were getting before the floor closed there. We're not getting the offset. We're, getting burned here on some bad executions. So we're not going to put as many LOC orders, limit on close orders out there, or market on close orders out there right now where we're getting nailed. So I think you're seeing institutions smarten up in a hurry on that. That's why you're not seeing the big moves there on the closing imbalances.
Okay. All right. Interesting pre-market session here.
Starting to go back.
Yeah, we're giving it back. With Marc, I mean, if you put new money to work here, I think you're being very optimistic. But one thing we've learned over the last few years is, you can't fight the Fed here. And
I'm really and you're right, Joe. I can't figure this market out. This market is very hard to figure out at this point in time. You have a battleground. It's a complete battleground around this 50% retracement. And this could go on for a while. We've had a 3 to 4 day battle. Really, VIX going down a little bit. We're obviously 41. We're still somewhat significant. It escalated a little bit yesterday with the sell-off. But really, you're still sitting around this 275 to 283, 284. That's a 50% retracement of the overall move. Yep. So you have people like Craig Johnson that are saying it's going to blow through it and it's going to 300. And then you have people like me that are saying, I'm not so certain because I think it takes a lot. If I'm thinking from a fundamental perspective, I think there is still some fear out here that this isn't going to be as easy as the market thinks it's going to be. I don't think people are going back to the normal way of life. I think restaurants are still going to be in a world of pain after the market reopens because people are going to be hesitant to go sit down and have a nice restaurant, not knowing who is serving their food, not knowing who prepared their food, not knowing who they're sitting next to in that restaurant. They're definitely probably going to be fairly close, and somebody sneezes in the restaurant. How many people are spooked by that? This could take some time. Again, we've talked about the comparisons. Chipotle took 18 to 24 months before confidence came back that I wasn't going to go get E. coli by sitting in there or going and ordering their food. This could take 18 to 24 months, even if, the coast is clear, because people are spooked and they don't want to get COVID. So I find it very difficult to go and buy the restaurants and the casinos and the cruise lines and even Disney because of the parks. If I'm buying stuff, and which I have on pullbacks, I'm buying tech stocks. Again, stocks that aren't directly impaired by this virus. So I think that trade continues, that we start to look, at those issues, not so much chasing the stuff that's in the dumpster here, because a lot of stocks haven't bounced significantly. You look at the cruise lines and they're kind of hanging out near the lows. There's a reason for that. People aren't jumping on and going back to the cruises. Think about how many stocks came back, 50% of their losses. And the cruise lines are sitting there right near the bottom. I mean, look at NCLH. Yeah, it's come back a little bit, but it was $55 and it went down to $7. Now it's $12. I mean, it's not back at 25. There's a reason for that. These are the stocks that are ground zero, and these are the stocks that potentially could have a lot of trouble if we're in a prolonged shutdown and if the confidence doesn't come back.
And the only question that seems to matter right now is, will it get worse? There's very divided opinions on that. There's people that think the worst is over. And there's people that think that the worst is over temporarily and it will get worse in a few months when we start to reopen the economy here. So look, new deaths in the hotspots are starting to level off here, at least in New York. The curve has undeniably flattened. So there's ammo for people who say the worst is behind us. There's also the total unknown of, we just don't know what's going to happen when we go back to our daily lives. So yeah, I think the longer we hang out at this no man's land level, the easier it becomes to get bearish. But you just don't know.
Go ahead, Spencer.
No, go.
I was just gonna say, we talk about the eyeball test, and when you're out, I went to run one errand yesterday, and I looked at the new hotels that were built in this area. No cars. I look at the restaurants, closed. But I'm like, you know what? you can't, if you're doing, short-term trading and stuff, you can't think about that stuff. I mean, you just have to, and that's what I know. A lot of people here are longer-term investors, and we try and cover the whole gambit here. But you just gotta put the blinders on, and you just, for the short term or for the swing trading or whatever your technical trading is. But there is, there's two contingencies out there. That's one that's going to take a long time. And then there's others that, hey, boom, this is nothing. This is just going to be, another V bottom, which it is right now. And I think the best thing,
potential for a V bottom is there.
Yes. I would just love to see us, from still being, having, money in the market. I'd just like to see us hang out here. Like maybe we're all looking for it to go way up, and some of us are looking at it to go way down. We had that extreme volatility, and I think, that's going to be gone for, the limit downs and everything. You don't, maybe we're not going to see that. Maybe we're going to go back down to 15 and 20 point ranges. Imagine that. I mean, I've talked about that a lot on the show when the 9-day average trading range was over 200. Now we're down to 134. And a lot of that is taken into account overnight. We only had like a 40-point range intraday yesterday. So, best thing for the market, we don't necessarily have to rip up. We don't have to rip down. Maybe we'll just stay here and we'll hug this area, and things will get better. Things will improve. The White House has a schedule for reopening. They're going to do the guidelines. Spencer, do you know what time that is today?
Tonight.
Oh, it's tonight.
They're gonna give us details tonight. They're gonna announce how they plan to slowly, with baby steps,
reopen stuff,
get us reopened here. So we will know more tonight. We didn't really talk earnings. There's a bunch that we missed. There was Abbott Labs, there was Bed Bath & Beyond, Morgan Stanley. The one that really caught my eye though was Lakeland Industries, LAKE. Remember, this was a COVID play.
Yeah.
This thing ran up to $28 here. Their revenue quarter over quarter increased by less than $1 million. Their total revenue from $27 million last quarter
that everybody was banking was going to have a phenomenal. Now, again, we need to consider that this trade really didn't start till late February, so maybe early March. So you had about a month. The first 2 months would have been normal. The third month would have been, better.
I don't know how normal the first 2 months. I don't know that at all, because it's not like the coronavirus wasn't a thing in January, February. So the fact that their total revenue only increased from 27.5 to a little over $28 million,
got to be disappointing.
Quarter over quarter is got to be, wow. I mean, surprising.
Yeah, you'd think that this would have been their kick-ass quarter here.
You would think so, wouldn't you?
Really didn't. I mean, support is support. It's down there around 14.5 to 15. I played this. Obviously, I played this back in February. I had a fantastic trade off. I talked about it on the show. I think I bought it around $12, $13, and I sold out at 19, and then some at 25, 23. I didn't get the highs. Like the high got up to 28, but I got out in the mid 20s on the rest of it. I sold a little bit early. I was like at 18, I got out of some, and then 20, and I think at 23 was the rest of it got out of. And then I said, like, I was looking at it and I was like, this trade is probably cool, cooled off obviously, and it never got hot again. It's tried to pick it up, but these numbers are not going to make the trade hot again here either. Is there support down there 14 to 15? Yeah, there is, but this trade, like you're saying, Spencer, this should have been their quarter to really shine. These should have been awesome numbers. People bought this 2-3 days in the last 2-3 days ahead of this quarter, expecting those numbers to shine, and those people are disappointed.
Yep, kind of.
You want any technicals on that one, or people really don't care?
If you want to give them.
Okay.
We like technicals.
Well, no, I didn't know if anybody's trading this thing.
Sure.
Boom. You've been in a long consolidation period here. Top of the range, which is history today, was the $18 area. Now you're on the skid, so we got to look for support. And where are you trading at? 15 and change here. Pre-market low is at 1535. Not much there, folks. 1527. If you think this thing is going to hold and bounce, then it's going to hold 1527. If not, I see a trap door down to Monday's low at 1450. So couple technical support levels. Not sure where to sell this on the pop. The low of yesterday's range, if you get a look at 1655 the first time, that probably maybe a decent place to lighten up, since that was yesterday's low.
All right, a lot we didn't get to on the show, a lot from the chat we didn't get to Morgan Stanley, we didn't get to Bed Bath & Beyond, we didn't really get to Abbott Labs, but we will cover all of these issues, and I'll write down the tickers tossed around.
I just want to say on Abbott Labs, this was predictable. The stock has been running for 3 weeks straight. So this is your classic buy ahead of the number and sell it on the number. So it didn't matter what they were going to say. Woo! I mean, it was up this morning, but they turned around. This thing was at 90. So they say, what are you talking about? It's only down 60 cents. This was at 95. $95 on this number. Somebody bought this up $4 on this number. All the good news has been priced into Abbott Labs. 65 cents, 58 cents, so it's a beat. It's nice numbers. Yes, they're going to have some, nice from the testing. I will say, I'm not just flat out saying this going back to 80, but a lot of good news priced into these stocks.
Hey, Des, I just want to ask you about just one other stock, and it was a pre-market prep stock of the day yesterday. What about UNH here? You talk about like a stock coming all the way back here.
Yeah, it's coming all the way back.
Yeah. Yep. Do you know it took back its 50% retracement in 3 days?
It's incredible.
When we came off the low, and then it had the little bump.
Look at that rip and rally from the low 187 in 4 days. It went up 80 points. Man, yeah. The buyers, that was the buy when there's blood in the street. The blood was everywhere. That was the buying opportunity.
Okay. All right.
Now it's hard to say. They're buying UNH now.
Exactly.
Is there room to 300? Sure. Maybe it's going to pull a wing stop and get it all back. UNH, obviously, healthcare. This isn't going away. It's probably needed more right now. This is, it's probably got room to 300. So it looks good. I wouldn't want to be short it here, but if you're coming in and buying for your long-term investment portfolio now, you've missed the meat. You're trying to eat the last bites, somebody's leftovers. So, and that's the problem with a lot of these stocks is you're coming in here buying them now, you've missed the bulk of the move. If you're buying stocks now, you're saying that this is going to be a non-event. We're all going back to our normal life within the next 3 to 6 months. That might happen. I hope that happens. I want nothing more than that to happen, despite even being 70% cash in my long-term portfolio. I want nothing more than that to happen because I don't like being cooped up in my home. I don't like not being able to go out and socialize. I don't like not being able to go out for a nice dinner. But I don't think it gets back to normal that quickly. That's my thoughts.
Yeah, I'm starting to get cabin fever a little bit.
Yeah, you do.
I'm getting cranky.
I'm getting cranky
I'm
as well.
Cranky as well.
So I made myself get up this morning and do the Peloton. I'm like, you know what? I just gotta do something. I gotta can't sit in front of the screen all day.
All right, so a lot of questions from the chat. I'm writing them all down. We will address as many of them as we can at the 3:40 broadcast with Joel and I. I want to thank everyone in the chat for their participation. Thanks to Marc Chaikin. You can catch the replay of the show on YouTube or the podcast on whatever platform you prefer. Please remember all the information from this show is meant to be used as informational purposes and not for investing or trading advice. Everyone have a great rest of your day. We'll talk to you in the afternoon, and be safe.